Hello everyone and welcome to today's video. My name is Jose Ricardo Tejan, editor of the Prosperity Digest newsletter and product specialist at Markets Daily. Today I want to take a look at the cross Australian dollar versus New Zealand dollar. And the idea today will be to settle this one as the trade of the week. We're going to take at this position mainly as I was going over the different investment banking research that we get to analyze and review. Nordea Markets, they have been long all the way from 103.50. Market apparently settled at bottom all the way to 102.70. So they're already a couple hundred, probably more than 200 pips in the position. They have been expected that the cross will go up all the way to 110. But in the latest report, they basically said that they're looking at some point to take their profits early. I do think that there's a little bit more to squeeze out of this position, and I think it's time for us, all our subscribers and different clients, to take an opportunity and go long this cross. As usual, I want to let you know before we continue that these videos for educational purposes only. We produce all this content, actionable content, trading ideas in equities, Forex, and also the options market and also futures, mainly to deliver a different narrative in the newsletter industry. And we want to make sure that you understand that we are not financial advisors, but if you were to take these trades, these ideas, and apply them into your trading accounts or decide to invest with them, you are managing your own risk. We cannot determine what is your risk profile. You are the only one that can do that. So at all time, make sure that you adjust the positions based on your risk and trading profile. Keep remember that past performance does not constitute future performance. All right. Having said that, let's begin. So last week was a busy week as far as Asia. We have, for example, we have the RBA, Reserve Bank of Australia. Then we have the Reserve Bank of New Zealand. One decided not to cut interest rates. They are focused more on the labor market. The second apparently is fighting CPI, Consumer Price Index. And it was the decision of the Reserve Bank of New Zealand to just cut interest rates. So as far as interest rates, now they are playing on the same field. However, the monetary policy does not converge. There's a divergence in what they're expecting, what they're doing. Now, keep in mind as far as the fundamentals that both countries are partners, heavy partners, dealing with China. And as I mentioned in one of my previous videos, we have to be hopeful, and we are expecting, the team at Markets Daily, we are expecting a deal to come through. This is the best outcome for the global economy. Now, in the meantime, is it going to be bumpy? Yeah, bumpy road. Not that easy, but it will happen. When it's going to happen, that's just a matter of time. Now, when it comes to take one of the two currencies here, commodity currencies, which one? Well, we have to settle for the one that did not cut. I wanted to play a little bit more the medium long-term game, the Australian dollar. And as I mentioned, Nordea Markets, they have been in this trade for more than 6 weeks. Now we're going to take a look at this, and what I do expect to be, it could be from 1 to 3 week duration on this trade. But as you will see in the Fibonacci projection, there is still some juice to squeeze out of this position. Okay, now I'm just going to go over couple images just to share. I like to share how it actually looks, the notes from these different countries. Some traders, investors, they have no idea. They have been trading these currencies for a while, and they still don't know how they look. So this is how, the 5 and the 20 note look. Okay? Great. Let's begin. Let's go directly to the markets. Let's see where we are. And here we go. So I have my position. I started at 106.01. Right now, minus 10 pips. Here are the two long positions. I have another position long on the euro versus US dollar. I talked about these, how potentially we have an opportunity in the next 2 weeks, and there are other couple of trades that I may not talk during the week, some ideas, trading ideas that we shared with our members, our clientele. Now the trade has been settled here, and as you can see in the 4-hour chart, first I'm looking at the retracement all the way from this low set at 105.30 to this high close to 107.20, and how prices gravitate around the 61.8% Fibonacci. Remember, in Fibonacci, the two levels that you must consider, 61.8, 38.2. Now, if I'm taking risk in this section. Your risk is more or less $460 with one standard lot. I can live with that. And the full extension, you may decide to have a initial profit taking at the 0 level, and then when we have the activation of the Fibonacci, they will still have a little bit more to take. That will be about 70 pips. So right now I only have one position. If this trade were to go against me, probably 30-40 pips, I may consider, depending on my equity, to add another standard lot. We'll have less to risk. I can do that. It's based on my risk profile, the way I trade. It makes sense to me. If it doesn't make sense to you, don't do it. Okay? Now, we have this position. This is what we're looking. Now, of course, if you're looking at this right now, you may say, well, this is obvious that it will continue pushing lower. It may not happen. We have here several 4-hour bars that are being gravitating around the 50 exponential moving average on the 4-hour chart. And if I take the daily as well as another case, you will see that probably should move this down here. I'll just keep it this way. The initial push, let's see, I will take this down just to give you, I have it here. Just adjust this to, this is the rejection actually. That was the rejection. And let me just put it here, 90, here we go. About $1,200 estimated. They push it higher, perfect, 176, $1,280. Now, the idea is this: if the New Zealand during the session keep pushing lower, we'll find support at 105.42, 12 pips above the previous bottom, which is this section here that we had. Remember, we're looking the extension from the low to the high, and then expecting probable retracements between the 38.2 and the 61.8 Fibonacci. I don't want to go all the way down to the daily chart, because if prices were to trade close and open below the 50 exponential moving average, 105.40, 105.42, I may consider that this is actually done and we may start a deeper correction in favor of the New Zealand dollar. We're not expecting that. We're expecting to find support here. If it happens, you also have the 38.2% of Fibonacci, 105.55 before that. So these are the considerations. The final extension, as Nordea Markets shared on their paper, on the research, it goes all the way to 110. For XYZ reasons, it may not happen. Remember, you always have to prepare yourself, use the adequate position sizing for your account, and also at all time protect yourself either with trailing stops, hard stop losses, or simply by break even your initial position. So I'm expecting this. It's costing me $400 to play the market in the long direction in estimation, but from this section I will be looking at least on the 107.90 level area. That's 215 pips estimated from this section. At the moment of the publication of this video, you can see that I'm minus 10 pips. That will give you a slightly advantage over the position I have, and as I mentioned before, I will be adding, based on my risk profile, the way I trade, I will be adding one more standard lot if the position goes against me by 30-40 pips, and I will be cost averaging my position into this area. If I get stop loss, I will notify you. Will be by Twitter, or just look in the comments of this video. So as I said, this will be the trade of the week. We're looking at these levels. Before I go, I will share with every one of you how we do it in a 4-hour chart. So I'm just going to open a chart here. Just going to go back, chart window. Just going to close this, take this out. We have the 4-hour chart. I'm going to start working. I like a very simple structure, black and white. We zoom. Okay, so in the 4-hour chart, pay attention that I don't have the 50 exponential moving average. I'm interested in the levels of Fibonacci. That's what I'm looking here. So I look for the low, and from the low to the high, you start expansion. Okay? Clearly now is losing the support at the 61.8%. Now, as you can see, these bars, we still have potential retest of these short-term 105.84, which is the low so far in the day, in the trading day. So that's what I'm playing with. As I said, I don't want prices to get below this area because I already know this is the bottom that was established last week before the Reserve Bank of Australia decided not to cut interest rates. So I'm playing with that. And also I have this idea, this level in mind. Now, from this area, what we want to do is go and project the entire area. So I'm going to take this and then have it here. Perfect. Next one. So we have it as a guidance. And this is what I'm working with. Of course, this is the last end of the pullback. This is the deep pullback all the way into the 61.8%. If it stops here, it's not a surprise. But remember, the most relevant levels, 38.2 and the 61. We have it here, and then I establish my target. My target, if I take it here, I can have it right there, all to the limit. Okay, and you can always use the 0 level as your first target, because from this area of trading all the way here you have 120 pips, and all the way you have a total estimated of 190 pips. Could be a little bit more on the 4-hour chart. It will all be based on the levels we're trading. Okay, so this is exactly what we have for the trade of the week. I know my risk, I know where I'm going. There are some fundamental variables playing in. You know what to have to do. Okay, so we'll look, see at the end of the week where we are. If it's we hit target, if we get stopped, if we need to adjust during the week, the entry level, the break even, if we have to move to break even, that we'll have to do. It's part of trading. You need to always measure your risk, and at all time protect yourself, protect your account. Now, before I go, as usual, I want to invite you. You can follow us on the Markets Traders Daily account at FTD Tweet. As I said before, not the brightest name, but it is what it is. We play with it. We post this information. We share with a few colleagues, the colleagues at Nordea Markets, colleagues in Spain, colleagues in Bali, Indonesia, and you can visit us here all the time, communicate with us directly. Also, at the same time, I want to invite you, it will be in the description of this video, and want to invite you to join Ross Mullins. This is our head of trading at Markets Traders Daily. Week after week, day by day, he publishes all the key levels, key historical level supports that may help you to find direction in the markets, in the currency markets. Just last week, he posted his last video capturing profit on the Gen trade with the Golden Week momentum. We knew about the Golden Week since April. Our colleagues, journalists at Bloomberg, published an article describing the whole situation. He were well aware. He established his levels, and he went for it. Clients of his trade room take home 68 pips with less than 30 pips in drawdown, which is fantastic. Now, as I said, in the description of this video, you will find the link to go to his YouTube channel. You can subscribe easily and get his daily analyses as soon as he publishes them. Once again, I want to thank you for watching this video. Please, you're welcome to participate, be proactive, ask as many questions you need, and just check just publish them on the comment section. We read all of them, and we will be responding as soon as we have the opportunity. Now, once again, my name is Jose Ricardo Tejan, editor of the Prosperity Digest newsletter and product specialist at Markets Traders Daily. Thank you for watching, and have a great trading week.